Good evening. This is the market update for buy sell short for Tuesday, May 15th. Starting off with the 15-minute chart today. Been gone for the last two sessions, and just looking back over the charts, it looks like the same old, same old. They just continue to bring that grease crap out. Any strength we get, and when it looks like the market is finally going to bust out of its negative vibe, we get some sort of rumor, some sort of news from Europe, and down we go. And today was no different. Nice little pop pre-market. Then last 30 minutes, we had a steep sell-off, even though the economic data was better than expected. The hangover, of course, being from Greece, a late sell-off in European stocks. Greece has to form a new government now. That'll be next month. So at least on a positive side, some of this Greece nonsense will probably go away for a couple of weeks. We did look like we were going to rebound, but going into the last 30 minutes or so, someone hit the sell buttons and down we went again. This week, Friday, options expiration. The put holders are swimming in the cash right now. And typically what happens is the market rushes to the opposite end of the boat. The option writers in Chicago try to wipe out as many people as they can on both sides of the trade. So calls are already worthless. Puts are sky high. Nice little rally. Wiped them out a couple of days before options expiration. It actually looked like we were going to get that today, but we had a late day sell-off. News always seems to trump things. But I would say we are still slanted towards the possibility of seeing a rebound into Friday. As you can see on the 15-minute chart, every time we find a base, we consolidate, and then we break lower. We found a base, consolidated, break lower. Now, these little bases are getting shorter in duration, and we are deeply oversold. And just going back to that put-call thing I was talking about. Here is the CPC put-call ratio. You can see this big 25% spike we've seen on it over the last few days. Typically, spikes like this revert to the mean, and, that is lower, and that means a rally is anyway. That's actually going to happen. If we look at the daily chart, you can see we closed under the rectangle trading channel that we have been in over the last 3 months. Now, next support level is the 12,529 level, and then the 200-day moving average down there at 12,200. And you recall a couple of weeks ago, I drew this line. I said one of the worrisome signs in the market is volume has continued to drop as we were consolidating up here. And now, as we've started our sell-off, volume has started to accelerate to the upside. Very, very negative. But RSI is at 30. Stochastics under 20. Money flow is very, very negative. Everyone is very, very negative and frustrated. And this is typically when they rip off, big, rip the face off short bounces in the market. 20-day exponential is right there at 12,953 right now. And when you look at it, we are down 700 points over the last, 8-9 days. Check out the VIX. Here is the VIX. I mean, we've barely squeaked higher here over the last week. We're up, from 17 to 22? That is nothing. But let's look at the VIX monthly chart. Now, the monthly chart does give us some cause for concern, and the reason being, if we scroll down here, this is a monthly chart going back to 2010, and this really is when this European garbage started really appearing. We had the exact same news now 3 years in a row at the exact same time. This is what happened in 2010, and on that European sell-off, the VIX went from 15 to 47. Last year, you can see right here, VIX stochastics indicator, we went from 15 to 46. Here we are again, 2011, about to turn up. VIX stochastics is about to break up through 20, 15. Where are we going to this summer? 50 again. RSI looks like we could do that as well. So even though we might see a nice little rebound in the market, odds, at least looking at the chart and the roadmap we've had for the last couple of summers, that could be something we could see. And again, another thing I've mentioned is the sell-off that we've had here, maybe the summer swoon pushed earlier into the year. Who knows at this stage? This market sucks. Swinging this market right now means you took a stock home overnight. We're not even talking about days or weeks. Swing trading right now is taking a stock overnight, crossing your fingers, and hoping the bottom doesn't fall out the next day. Ridiculous. Small gains market, take whatever action there is during the day and move on. Russell 2K chart, we've closed below the range here as well. Now, we've got options expiration this week. We've closed below the range on the Dow, on the Russell, and the other indices. I'm inclined to think we're going to get a snapback. We do have the Facebook IPO on Thursday. We've got a lot of momentum in those Facebook stocks. So there is a little bit of momentum out there, and we're below the range where one of two things are going to happen. We're going to fall to the 200-day moving average or going to bounce back up into the risk range. Flip a coin, because I really don't know which way it's going to go either. And that is why we remain high cash. We take stocks home overnight. 1-2 plays max. Play the action intraday. Get your small gain and move on. I mean, we were very, very active first hour of the day today. Lots of spikes in the social media plays, web methods, FFN, VRNG, which actually reported earnings after hour, $106,000 total revenue for the quarter. Are you kidding me? 50 million market cap. Web methods posted more revenue than those guys. At least its revenue's in the millions. But nice early action and then just snooze fest really for the rest of the day with traders just afraid to really hold anything, and it's hard to argue with that mindset right now. The usual suspects are starting to do well, though. I mean, right now, over the next couple of days, you could just focus on the social media plays like, let's pull up some. Zynga, looking like it wants to break into the 9s. FFN has been very active today. QPSA always does well on the social media. Glue now has gotten pumped on CNBC by numerous analysts. I use that word very loosely. That one, those are pretty much the 4 or 5 stocks that you can just trade the intraday moves whenever the Facebook hype hits. I mean, Groupon had a nice spike on its earnings report and faded into the close. Now, one that actually does look good and could see some continuation is Pandora. This could have its eyes on a move to the 200-day moving average over the next 2 days. So another, 10% possible upside on a decent chart here. Ren has also been doing very well. A breakthrough. Actually, they say this one hit. Well, 619 high of the day today. I didn't even notice that. 625 is the break, 650, 675. If it gets crazy, would not be out of the question on that stock. Zynga, a break through that 886 level. Could see a big move, but I'm still flabbergasted that Zynga is down here 2 days before the Facebook IPO, and these guys pretty much made Facebook. I mean, this is a stock I thought going into Facebook would be up here in the 15, 16 level. That could happen. Facebook or Zynga back in late January into February did run from 9 to 14 over the course of a couple of days, 50% move. So it can do this. The breakout level to watch would be 954 really. And the 50-day moving average would be the target over the next couple of days if it gets crazy. But if it gets crazy, we'll start playing some of the other sympathy plays. PopScan tonight, a couple of decent plays, but really and not a whole lot of things that jump out at us right now. And it just remains, we play the flavor of the day, remain high/all cash overnight, and just see what the market brings intraday. But, over the next couple of days, our focus is going to be on these Facebook plays. Facebook, they've upped their offering price, so that stock, probably get chased on the IPO on Thursday. Seeing that one open above $50 would not surprise me in the least. So that's it for the video. If you've got any questions, feel free to email me, but we continue to sit on our hands and trade whatever little action there is intraday and try to go home as flat as possible nightly until we, start to move into a better looking market. 20-day exponential suggests that we get a rally into Friday, especially with options expiration. But am I buying swing plays with that anticipation? Hell no. If I miss a big rally on a gap up, so be it. But the risk reward still remains to be, the high cash overnight and trade what we get intraday. And that's it. I'll see you guys in the chat room tomorrow. Good night.